a lot of people don't realize that you can literally have someone who is smarter than you and better than you do something for you. You're like, wait, what? How does this work? And it's mind-blowing for a lot of people, especially someone like myself, and I'm sure a lot of people listening grow up with the societal pressure or the family pressure that hard work is a job well done and you get a pat on the back and you feel good about yourself for working hard. Unfortunately, when you're building a team, you're building a business, and you're vision casting, like you said, you can actually be penalized for working hard because you're actually not working to your highest and best use.
Hey guys, welcome to another episode of Building a Better Business. Today our guest is Rob Beardsley, the founder and CEO of Lone Star Capital. If you haven't heard of Lone Star Capital, they're a national multifamily investment firm focused on underperforming large-scale multifamily properties in Texas. Rob, welcome to the show.
Yeah, it's great to be here, Jake. Thanks for having me.
Yeah, love it. This is a long time coming. I joined your guys' podcast a few months ago. We had talked about getting you on it, and so I'm so stoked that we can jump in and really talk about Lone Star. You guys, Lone Star Capital has been going for a few years, so I want to really dive back into the genesis story of Lone Star Capital. I've heard this story a number of times, seeing you up on stage talking or in small groups, and I love the story you talk about of just getting out there and underwriting properties and starting from the very beginning. So I want to hear this for all of our listeners. Like, where did Lone Star Capital start? How did you partner with your current partner, and kind of walk us through how this whole thing got started, if you don't mind?
Yeah, for sure. So at this point, it's crazy to say, but Lone Star is now just about 7 years old.
Wow.
And so so over the last 7 years, we've acquired almost 750 million in multifamily assets in Texas. But how we got there is pretty crazy because nor myself nor my business partner are from Texas or really have any ties to Texas. So I grew up in Northern California in Silicon Valley. I grew up in a real estate family, so I had that kind of head start where my parents, they used to run a residential brokerage firm from home. So I was around their real estate business. I was, like my dad likes to say, I was in diapers on construction sites. So that's fun. And then my business partner, he was formerly a tax attorney for 12 years. So he was working in New York City in the corporate world. And then we connected through a mastermind group that was
Mm,
focusing on multifamily. So the mentor of that group had a lot of units in Texas. So him and I, Kent, my partner and I, we felt like it made the most sense just to start actively looking at assets in Texas. And that's where both of us got our reps. We were just underwriting tons of deals, talking to brokers, putting in offers. And that's a really fantastic way to learn the market. Like you said, even if we weren't really quite ready to buy a deal, it's kind of funny.
mhm.
It's like the dog chasing the mailman,
Yeah.
right? Like we're underwriting these 10, $20 million deals. And it's like, well, what would we ever do if the numbers
Yeah.
made sense?
What if you actually get one?
Right. And so what happened is we got one.
Yeah.
And, it's kind of crazy, but finally a deal came along and the numbers made sense and we put in an offer and the offer was accepted and we were able to make a go of it. And that's when kind of not only everything became real, but then all these new responsibilities came
Mm,
into play because when you're just out there kicking tires,
yeah.
you're just kind of flexing your underwriting muscles and your sourcing muscles and whatnot. But then once we've put the first deal under contract, now it's all about the transaction, it's about
Mhm.
the debt, it's about the equity, it's about the management and the due diligence, and then you close and now you've got a job, right? You
Yeah.
just closed on a job.
Yeah.
So it's pretty intimidating, and it's totally not what you'd expect because when you think about buying real estate, you think, "Oh, this is great.
Yeah.
This is
Sexy.
sexy, like this is fun. I'm just gonna, put these numbers in a spreadsheet and then bang, all this
Yeah.
what magic happens." Then you realize, "Oh wow, I'm actually dealing with just, frankly, one of the worst industries in the world, property management." You're talking
Uh-huh.
about tenants,
Yeah.
toilets, termites,
Yeah.
and the whole bit. So that was our introduction and of course our education.
Yeah. Yeah, I think, a lot, well, at least what I see with a lot of our investors is they think that buying is, like, the only thing. Like, "Oh, we once we buy, it's done. We're good." Like, that was the no, that's the sexy part. That's, like, the fun part. That is not an easy part, but it is I would say, probably one of the easier parts, because once you buy it, now you're bringing in all these other partners. You're taking all these other considerations in now, and you've got to execute for the entirety of that hold period, whether, it's usually 5 years, but it could be 3 years, it could be 10 years, it could be something you hold for longer. And you, like you said, you're selling yourself up for a job long term, and then you start stacking those deals, and you're essentially taking on multitude of jobs. Why, you're a smart guy, you're a good looking guy. Why even get into multifamily real estate to begin with? Like, what was it about not only real estate, but multifamily? And then even to go a step further, why Texas? I mean, you're in New York now, you're from San Francisco. Why?
Yeah, well, I think for me, multifamily clicked super well because of my family's background in single family. So it's cliche, but it's so true that the difference between single family and multifamily is basically just one unit versus a hundred
Mhm.
units and your confidence, right?
Yeah.
So many people get stuck playing a small game because they told themselves that that's what they have to do. They don't, how do I say, they don't give themselves the permission to go play the bigger game
Yeah.
even though the bigger game is straightforward and it's right in front of you. So for me, when I kind of was doing the research and it just clicked, I get it. Numbers are super straightforward. The business is very simple. It's not easy, but it's simple.
Mhm.
And that's where it made sense for me to just, okay, if I invest all my effort into this, I will get rich for
Yeah.
sure,
Yeah.
right? And that's the type of person I am. I like a sure thing. I don't wanna create an app like you and I created an app for the
Yeah.
iPhone and then sell
Yeah.
it for $1 billion
Yeah.
because I just can't feel sure about that. But I can feel sure about real estate. I can feel
Mhm.
sure about the fact that my business is not going to dramatically be different 20 years from now, which is with the pace of change in today's business environment, you can't say that for many
Mhm.
businesses. So I'm kind of like a traditionalist in that way. I just love the steady Eddie nature
Yeah.
and the way that, this business is going to be the way it's going to be. So that to me, I just love about multifamily and why Texas. Texas, like I said, we had that mentor starting out, so we had
Mhm.
that built-in network, so to speak, in Texas. We had a lot of investors who were showing interest in Texas. So if we put our effort there, we probably would be well rewarded.
Yeah.
Another thing that I like and I did like early on and still do is I like the size of the markets. So if you're staying in the major metros, you're talking about each city having anywhere from a couple 100,000 units to like Dallas Fort Worth Metroplex and Houston both having 650,000 units each.
Mhm.
So that's good, and I'll explain why in a second. And then another thing about that is Texas and these markets, a lot of these properties sell frequently. It's not like you have generational owners that never
Mhm.
sell because it's like, why would you get into a market only to be shunned because everyone already owns all the property
Yeah.
and they never sell? So the good thing about Texas is people sell rather quickly. They have their business plan, they're in and out. So what that means is you got a lot of property and you've got a lot of transaction activity, which means that you can stay busy from a sourcing perspective. You can be looking at deals all the time. You can
Mhm.
be sifting through and picking the best ones. So to me, that makes a lot of sense. And it's I don't think it's necessarily the best market in the world. I think you could be successful anywhere, but I
Sure.
think the most important thing, whether it's for us or anyone listening, if you are an operator, is to go deep and be super focused on a market. You
Yeah.
can't really wear your investor hat when you're building a business because you're trying to go angular. When it comes to our investors who invest with us, I expect them to be diversified, but I don't
Mhm.
expect myself to be diversified
Yep.
because I'm going deep into one thing and then I'm giving that option to them.
Yep. Completely agree. You said something back a couple of minutes ago that it's a conversation I have often. Most of our, I shared this with you offline, but most of our investors are going to be business owners at Skyline Point Capital. And the conversation we have frequently, and I'm sure you do as well, is you have that conversation of, well, why multifamily over residential? And one of the main reasons, and we always talk about this with our investors, is it sounds counterintuitive, but for the most part, the larger the deal, the easier it gets. I mean, it's not this, vertical or this linear trajectory. It's sort of like when I first got started, someone once told me that 15 units is actually harder than 150 units. That sounds so backwards, but it really is true. And The other thing we always talk to them about is, if you're buying a single family home and you're doing it as an investment, as a business owner, you're active. There is nothing passive about that whatsoever. And even if you add more units to where you can hire like a property manager to manage your 5 to 10 units, you're still pretty darn active. Whereas the multifamily, it's it is about as passive as it comes. And so you can still focus on your business. You don't have to worry about focusing on your real estate portfolio as well. But to your point, it's not this linear trajectory of difficulty. If you have the confidence, and you have the knowledge and skill set, you could take it down as yourself. So
Yeah, for sure.
you've got now, I think about a dozen people on your team, and correct me if that does not include the property managers and things, on the property management side, but you got about a dozen people now. And so things are going well, 650 million to 700 million under management. What was the catalyst for this? Was there a moment for you and Kent where things just clicked and you saw that, okay, business is going to work here? Like this, we got a runway here that we can go down. Was there one or two moments that really stood out for you?
So, like I said, I think because of the straightforward nature of the business and the long-term commitment to it, it's kind of like not if, but when. So I think we had the conviction. Yes, of course, there's definitely moments when you're starting up and we're still a young company, we're still a startup, but the very early stages, it's still very much a question of like, is this going to survive
Yeah.
or is this going to fail?
Yeah.
So there was plenty of those moments early on. And that was the first deal. Like, were we going to fail to raise the money? That was a whole saga and stressful series of events. And then we got through
Yeah.
that, and then we go to buy the next deal. We had to raise less money than the first one. So it's like, okay, it's our second deal now. It's a
Yeah.
little more experience and it's a little less money to raise. We should be able to do this. But again, the second deal was arguably harder. It was
Yeah.
so difficult. So in this business, raising money is super, super hard because it just is a very hard skill and it's something that requires a lot of trust, a lot of
Mhm.
time to build and develop those relationships and the infrastructure to be able to raise capital and actually provide a good experience and whatnot. So those were kind of the very early on struggles. But so basically the first year in business, we bought one deal. Second year in
Mhm.
business, we bought one deal. And then it kind of chugged along like that until basically it hit a tipping point where we went from being capital constrained to being deal constrained, right?
Oh,
And so
interesting. Yeah.
this is kind of the classic scenario
Yep.
for anyone in this kind of private equity style business where you're marrying
Mhm.
two things, deals and money,
Yeah.
right? So when you're starting out, everyone is capital constrained. That's just how it
Yeah.
goes,
I
right?
can find you a million deals, but I can't find $1 million.
Yes, super tough, exactly. So, but then you get to a point where it's like, okay, I've done a couple deals, I figured it out, I'm starting to build a base of investors, and now you actually kind of have a constraint on the deal side
Mhm.
rather than the capital. Like the capital's coming, so then you kind of need to invest in the deal side and figure out, okay, I need to adjust. Like
Yeah.
maybe I start buying bigger deals, maybe I start buying more deals. So then you kind of
Yeah.
pinball between the two constraints, and then you hit a third constraint, which in your or in my, small nascent business brain, I'm like, wait, a third constraint? What is it?
What the heck? Yeah. I thought it was
So,
just supply and demand. What?
right. So the third constraint becomes basically human capital.
Yeah. Right.
And basically you don't have the systems and the people in place
Mhm.
to be able to both handle the deal flow that you're trying to pursue as well as the capital you're trying to raise. Like, yes, individually you can potentially put those components together, but to marry it all and to not go insane, you don't have the infrastructure and the team. So that takes a rebuilding
Yeah.
of making sure that you have, when we first started out, we never thought we would have to have like full departments essentially dedicated to
Yeah.
investor relations. We thought,
Yeah.
oh, well, we should just be able to pick up the phone and an investor just gives us money, right?
Yeah.
But no, of course, you have to have a whole process and a whole team for that
Mhm.
and so on. And then of course, unlike raising capital, which is I think one of the most valuable skills in the world because of how scalable it is, right? You
Mhm.
can pick up the phone and you could raise $10,000 or you could pick up the phone and raise $10 million.
Mhm.
and the effort essentially is the same.
Mhm.
So that's super scalable. But unfortunately, property management is not scalable at all.
No.
With every additional unit in your portfolio, you have an additional unit of effort. So you have to hire more people from a property management standpoint, regional manager, asset manager, accounting. So those are kind of the different constraints that we have bumped into as we've
Yeah.
scaled, and like you're saying, different points, there's a click, "Oh, this
Yeah.
is great," and we're going, and then different points we kinda hit a wall and
Yeah.
have to retool.
Yeah. Now that leads me into a question I'd been wondering. So you started off on your own, and you and Kent partnered, and to your point, you get to a certain stage where, well, Kent and I can't do this anymore just by ourselves. And we're going to keep doing this, but we have to bring in people to support us and support the other areas of our business, whether it's property management or investor relations or marketing, whatever the case may be. Uh, but I know you know this, but a lot of small business owners don't always know that the wearing the entrepreneurial hat is different than wearing the leader hat. How was that experience for you going from like I don't want to call a solopreneur, but like a small business owner where you're just doing it all yourself? You don't have to really manage anybody to now, I mean, you're a you're a CEO, right? You're the person vision casting. You're the person being the leader everybody's looking to for guidance. What was that experience like shifting from just the doer to the leader?
Yeah, in some ways it's bittersweet, and in other ways it's magic,
Yeah.
because a lot of people don't realize that you can literally have someone who is smarter than you and better than you do something
Mhm.
for you,
Mhm.
and you're like, "Wait, what? How does this work?" And, it's
Yeah.
mind-blowing for a lot of people because y especially someone like myself, and I'm sure a lot of people listening, grow up with the societal pressure or the family pressure that hard work is a job well done, and you get a pat on the
Mhm.
back, and you feel good about yourself for working hard. But unfortunately, when you're building a team, you're building a business, and you're vision casting, like you said, you can actually be penalized for working hard because you're actually not working to your highest and best use. And that's something that once you learn, you can't kind of unsee it, sort of
Yeah.
thing, where it's like, okay, I'm always kind of analyzing, like, am I doing something I shouldn't be doing? Like, I might be
Yeah.
working technically, I'm on the
Yeah.
job, but is it actually a good use of my time? So I think I've developed a very good skill of being able to figure out who, not how, where are the bottlenecks, and that's the true way to scale. And one other interesting point is when it comes to growth, if you look at like venture capital and Silicon Valley type startups, they don't care about profitability, right? They're
Mhm.
getting a big check from Sequoia, and then it's like, okay, here's a big check from Sequoia. Go hire 40 developers and go, go, go. Like if you're
Yeah.
profitable, that means you're growing too slow.
Yeah.
And on the flip side, you could basically have a very timid business owner who is a control freak and is too scared to actually hire and delegate. So then
Yeah.
they stay small, but they're very profitable. Like
Yeah.
they maybe stay small, but their profit margin's big because guess
Mhm.
what? All their
Yeah.
time is free,
Yeah.
right? So I think we've done a good job of being in the middle where like Kent and I, we like to sleep well at night, so we're not, like, betting the house and, like, hiring
Yep.
people
Yep.
and running a loss and stuff, but we are making a profit so we can live, but then we're seeing around the corner and realizing, "Okay, great, we're making this money, but you know what? Actually, we should hire this person because we can
Yeah.
scale a department," and, so I like thinking about hiring kind of right at the need and making sure that we are preparing for the next level.
Yeah, yeah. I think you guys have done a really good job of that. I mean, Steve and I have had the privilege of being able to hang out with you guys a number of times and meet most of the team, I would say. And whether you talk about Craig from a business development standpoint or Dasha from the investor relations, you've surrounded your guys selves with A+ players. They're the right people in the right seat on the right bus, which is that's a talent to be able to find the right people and place them in the right spot. Like they might be the right person, but not on the right seat, or they might be the right seat, but not the right person, and vice versa. I think you guys have done a really good job of finding those A players to allow you and Kent to say, well, I'm really good at these three things. These are my critical areas of focus. I'm going to delegate the rest of this to people who are, like to your point, better than maybe what I can do, or get you at least 90% of what I could have done, which is good enough. So you guys have done an excellent job with that. What what would you say has probably been the hardest part of launching your business, growing your team? Has there been something, and oftentimes I get like the COVID response, I get, the downturn during that, but what was one of the hardest things that you guys have had to go through as an organization and even you as a leader?
Yeah, I think people is a really tough thing. Uh, just like you, I mean, thank you for the compliments as far as hiring good people and stuff,
Yeah.
but it's not. It's very difficult to get the right people, and to hit on all those things, like the right
Mhm.
person at the right seat and everything. And unfortunately, you can't be perfect, and you're gonna have to make a mishire and have to fire, and you're gonna have to, and good people might leave you, and so just learning from those costly mistakes is a big challenge. So we're certainly going through that now because we're growing so quickly that
Uh-huh.
sometimes I hate this phrase, but I use it all the time. You have to hire under the tyranny of the urgent,
Mm.
and
Yep.
that's not what you want to do. You want to be
Yeah.
hiring in the luxury of the
Yeah.
whatever, right?
Yeah.
In all the
The
time you
smooth
need, and
sailing and yeah.
yeah, and it just doesn't work that way. So
Yeah.
you can't be a perfectionist, and I think I used to consider myself a perfectionist, but I think through business I've lost it, and I
Yeah.
can't say I'm a
You
perfectionist.
cannot. Yeah.
Yeah, you have to be super comfortable with just, "You know what? This is on fire. There's a problem here,"
Yep.
and you just kinda live with it, and you're good. So that's a big challenge, but also something that's manageable, something that we're overcoming. So it's just it's all exciting if you don't let it overwhelm you.
Yeah. Yeah. I love that. All right, I want to shift. So I want to shift more to like the future focus here. And my next question for you, I'm super excited to ask you because a little context for listeners. Skyline Point Capital has partnered with Lone Star Capital on a number of deals. We do that because you guys are experts in Texas. You guys are some of the best. You're definitely the best in Texas, and you're some of the best when it comes to underwriting and fundraising and all the aspects of what we do. And so I've been excited to ask you this question. What do you see in the world today, in the industry that we're in, that gives you excitement? I mean, you're a guy who you see into the future, I say just as good, if not better than a lot of people in our industry, just because you've been around the block, you've done thousands of underwritings, you're talking to people, you're in New York, you're talking to some of the smartest people, you're rubbing shoulders with them. What gets you excited about the industry that we're in over the next, you call it 3, 5, 10, 20 years?
Yeah, one of the things that has me very excited is something I mentioned earlier, which is just the stability
Mhm.
and the fact that I have confidence that the business will look very similar in 20 years from now that it as it does today.
Mhm.
So that's something to be very excited about. Another thing to be excited about on a more short-term basis is the cyclicality. So on the one hand, you've got long-term stability, but you have short-term cycles.
Mhm.
And right now we're going through a down cycle where properties have come down in value. There's some shakeups. There's some people potentially going out of business or just exiting the industry. And that creates a lot of opportunity, whether it be from a hiring standpoint, we can hopefully acquire good
Yeah.
talent. Hopefully, we can acquire good deals. And hopefully, we can also acquire good investors and take market share. So, I think, that's in the very short term, that's something super exciting. Like, right now is when you need to hit the go button
Yes.
because there's so much opportunity right now to, like I just said, take market share across those
Yeah.
3 things: human capital, investor capital, and deals,
Yeah.
assets.
I'm sure you hear this a lot, but what do you say to investors who say, "Well, you know, now is not the time to be investing." I mean, like you said, market, who knows what the market's going now, values of properties are going down. What is your usual response to that when you hear that?
Yeah, I think there's 2 answers. Number 1, it's, "Hey, you're right. Now isn't necessarily the time because we don't proclaim to know the future, and nor do
Sure.
we try to time the market. Like, we're
Yeah.
gonna be coming to you and soliciting capital today, tomorrow, next
Mhm.
year, and the year
Yeah.
after, right? So we're raising money and we're deploying capital in all parts of the cycle. How that gets deployed as far as strategy, risk posture, certainly differs across the cycle, but
Mhm.
we're certainly always deploying capital. However, as far as today, my response is if you, Mr. Investor, are thinking that, then that's probably indicative of how a lot of other people are thinking today.
Mhm.
And it's absolutely true. And it's manifesting in a lot of capital being on the sidelines.
Yeah.
And there's an inverse correlation between the risk premium, or basically how high of a return you can expect to make from a deal, and how much capital there is in the market, right? When there's a ton of
Yeah.
liquidity, ton of capital, and everyone's excited, that usually means returns are most compressed.
Yep.
And then the opposite is true. So we felt like 2024 was a really fantastic year for risk premiums and for the quality of deals and
Mhm.
pricing. And that has everything to do with the fact that a lot of people thought it was not the right time.
Yeah. Yeah. You could point back to recent future of people who were in the same sort of mindset of this is not the time to invest. And if you flash forward a couple years and see when they started exiting those deals, turns out that was a hell of a time to be investing. And to your point, there's cyclicality to these things. And while we don't predict the future, we do our best with the data been given. Yeah, when people are saying this is not the time to invest, it's a good time to. I should perk your ears up and say like, well, maybe this is a good time to dive a little deeper and see if I'm missing something or I'm missing an opportunity that may pay huge dividends in just a couple years. All right, let's flip it. What gives you angst about our business? Is there something that, like, doesn't keep you up at night, but like just about our industry, about your business that is like always on the back of your mind?
Well, I think again, it's the people thing.
Yeah, was that what you're doing over here? You're like,
Well, no, my lights went out.
"Oh, I didn't see that."
Yeah. As soon as you said what gives me angst, my lights went out.
Yeah, oh, I thought you were pointing to people like, all those people
Yeah,
give me angst."
these people give me anxiety. Well, it is true. Yeah. I mean, I can't say it's really about our industry, because the industry is what it is. So I'm not
Yeah,
bemoaning
yeah,
necessarily any facets of the industry, but just business itself, and I guess in particular about the property management business is it's generally speaking a high turnover business.
mhm,
So finding talent, retaining talent, training talent, it's all very difficult. So that's just it's just a lot of work. And like I said at the beginning, property management is one of the worst businesses. It's thankless. It's dangerous.
yeah.
It doesn't pay well. So it's unfortunately just not sexy. Like to your point, buying
Yeah,
deals is sexy, but really the heart of the business and where you make all the money is through the management. So
mhm,
that is what gives me a bit of angst. But other than that, I really can't think. I mean, I think we're just so blessed. I think the business
yeah,
model is amazing, and building what I love so much is how long term everything is. It's like,
mhm,
if we build a relationship with an investor today, we could be investing with that investor for the next 40 years.
mhm,
And we could be 1031 exchanging. The deal we buy today, we could 1031 exchange and
yeah.
exchange and exchange. So those sorts of things are just wipe away all the angst.
Yeah. We talk about that. I'm so glad you brought that up, the property management side, and kudos to you guys for identifying that as a key area that you guys can differentiate yourselves on, because we talk about that with investors is, whoever you choose to invest with, whether it's us or Lone Star Capital or, Joe Schmo down the road, there's some things you should really consider, in who you choose, and one of them is how much emphasis do they put on executing the business plan, after the purchase, right? Like, we talked about buying the deal, closing it is sexy, but the hard work and where the money is really made, or a lot of the money is really made, is how do you execute the business plan that you put into your underwriting? That's a long-term process. That is a thankless process. That is, like you said, dangerous at times. And but that's really where you're going to make a difference in seeing the outcome that you want for your investors is in that property management, executing the deal. So kudos to you guys, man, for identifying that and doubling down. I mean, for God's sakes, you moved down from New York City down to Houston to double down on that. You guys do it good already. How do we do it better? I'm moving down to Houston, and we're building a better team. So
Yeah.
you
Yeah.
guys have a
Thank you
good
for that.
focus there.
super exciting stuff, and we're rolling out more and more new initiatives. We're really taking a eye, fresh look at what is one of the oldest businesses ever, which is being a
Mhm.
landlord, right? So we're going to be rolling out a lot of innovative things. We've rolled out innovative compensation programs for the on-site teams. We're rolling out Lone Star University, which is going to give out certifications. We're going to have trainings and stuff,
Oh,
so people are
great.
going to get certified through us and on our best practices on leasing, on collections, on accounting. So everyone's trained up and has the knowledge to be successful. So yeah, a lot of exciting things coming.
Yeah. Well, I wanna end on a more personal note, if you don't mind. Most business owners, I would say I could probably say all business owners, but most business owners, build a business because they have some end personal goal in mind. So, with that in mind, what's your goal for Lone Star Capital, or you and Kent's goal for Lone Star Capital? But then how does that play into maybe the personal side of things of why you do this and where you wanna end up long term with it?
So we don't necessarily have an explicit end goal. I
Sure.
think that would be hard to say, but definitely on a longer term basis, we want to get the portfolio to, somewhere around 15,000, 20,000 units, probably
Mhm.
20,000 units. That's a nice big organization,
Yeah.
handful of markets. So like a true regional player where we have diversification
Mhm.
and full scale operations in those respective markets. So yeah, call it like, 2.5 billion, 3 billion AUM. That's a big AUM target.
Yeah.
And other than that, the most important thing is just staying in business, and
Yeah.
keep doing what I enjoy doing. Like it's the most important thing ever is just to enjoy doing it because
Yeah.
if if we just keep at it, like the sky's the limit. We're just going to keep getting better and better and bigger and bigger. And as far as monetary goals, like we will far exceed any personal monetary goals just through being in business because the business is so lucrative. So it's like, if you look at kind of the titans of any industry, they're not going to work for the money, right? So
No.
that part is handled. So
Yeah.
yeah, I think it's all about the lifestyle. And it's actually funny. Craig and I talk about this stuff all the time because Craig's very goal driven,
Mhm.
and he's always talking about like, "Oh, in the future, like we gotta do this and we need to do that."
Yeah.
And he's like, "I can't wait until I have this, and I want a
Yeah.
country club membership, and I wanna buy this house." Right?
Yeah.
And then I have to tell him, I say, "Stop, stop, stop. Like, I
Yeah.
love all that, but how is when you have all that, how is your life gonna be different
Yeah.
to where it is today?
Great
Because look at
question.
look at your life today." And then he's like, "You know what? You're right. I actually lived the dream life already."
Yes. Yep.
And so that's the key.
I love that. Well, Rob, how if people wanna find you, if they wanna get a hold of Lone Star Capital, where could they do that best?
To learn more about Lone Star, you can go to our website, lscre.com. Lots of good information and free downloads on our website to learn more and get in touch there.
Awesome. Rob, thanks for joining us on this episode. It was a blast just hearing about Lone Star Capital, and having you as a guest here.
Yep. Thanks a lot. Had fun.